on, folks? This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by James Gardner. Believe in yourself and everything you can be. Market-wise, let's take a look at it out here. We had the Dow Industrials finish down 85, NASDAQ off 28, S&P's off 8.5, gold contract down $6, traded at $1,202 an ounce. Silver off 20 cents at $16.24 an ounce. Platinum down 4 at $1,184 an ounce. Copper down 4 pennies at $2.67 a pound. Light sweet crude up 71 cents, trading at $50.30 a barrel. Bonds. The 10-year down 9 ticks, 126.27. 30-year off 27, 158.27. King dollar flat, actually down 29 ticks, but might as well be flat, hanging at those highs. Wants to test that January 26th high. King dollar's at 95.45. The euro is down 10 at 111, and the yen is trading down 42 at 119.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? If we go take a look at the SPY is up here hanging at the highs, folks. This is, I suspect we get another day of window dressing. It's going to be a close call because what we did have inside the SPY out here today, you get a slight move down at the open, had some juice in it. SPY made it all the way back topside from where it was. And if we do take a look at it, what you're going to see out here, first I'll put this on a 10-minute for you. What you're going to see is that, you know, the SPY yesterday closed at 211.99. It opened this morning. Your first sell down got sell down from the 211.50 mark to 200 mark. Bottom line, you're all the way back up there, and you're not only back up there, but you're back up there. That last buy in there had some juice in it. So that is saying SPY more than likely tomorrow morning is going to be still hanging at this 211, maybe 56 mark. Volume. What do we have out here in volume? We had 678 million versus 756. Inside the Qs, what do we have inside the Qs? Inside the Qs, same type of setup. Bottom line, they're not backing off the highs out here. Even though the market was down, folks, this was really a sideways move out here today. The Qs, we hit a low of 108.18. You closed out at 108.87. Your high out here yesterday was 109.42. Bottom line, when you take a look at that aspect, I suspect what we're going to see, you're going to see another sideways movement out here tomorrow. The roll isn't here just yet. I do expect what you are going to see, though, you're going to see this market basically just roll over. This is all about window dressing at this particular point. If we go back to the SPX for a second, I showed this last hour, but I want to show this right now because this is the number you want to watch for this week, folks, okay? Inside the cash S&P, what you have is this. And I'll put the SPY up so you can see it. So everyone has the SPY. You can see the volume. You can see the characteristic. You can see all the above. What you have is that we put this on a weekly basis. What you're going to see is that we are right on the cusp of the channel line that was broken. The first time this channel line was broken was in October. Okay, this channel line had got broken in October when we came down hard. Where the SPY happens to be slightly right above that channel. Now the cash S&P is not. The cash S&P is right on the channel. So on the SPY, what you'd be looking for at the end of this week, the SPY would need to close somewhere about 209, 210. The cash S&P, now this is a different ball game. So if we take a look at the cash S&P, what you're going to see is that the cash S&P, I'll bring this back and you're going to see how this sets up, because the cash S&P, which is, by the way, the cash S&P is more important than the SPY. The reason being is that the cash S&P does not trade. And what does that mean? That means that everything has to be calculated inside the cash, in order to come up and generate that number. And what you're going to see is that the cash S&P is laying right on that trend line. The trend line, in fact, that hit it today. The trend line that we're talking about on the cash S&P and our close at the end of this week is 2101. And right now, you're at 2107. So that's the number you want to basically keep your eye on this week. I do expect that we are going to see it below that area. Window dressing's over. People are going to be getting out of town as fast as they can. Gold contracts. What do we have with gold? Bottom line, gold needs some wide price spread, accelerated volume. Gold out here today, we traded in a wide price spread out here today. You had an expansion of volume. We didn't break. So the bullish part is that we didn't break a lower swing. The bearish part is that we had an expansion of volume. Gold got to 1194, the last swing low out here, from the 24th. Put this on a daily for a second. The 24th out here was 1190 flat out. You know, you never like to see an expansion of gold. What we did have last week is that last week on the 26th, that went topside with some volume. So right now, tomorrow is going to be really an important day inside that gold market. Bonds. What do we have with bonds? What we have with bonds is this. The correlation inside here is that, and we have a rollover that has happened inside the bond market. So you get two different contracts right now that are trading. The 10-year contract out here traded 1.1 million contracts out here today. That is not bad. That's kind of basically lighter volume coming into the swing lows out here from 126.14. That 126.14 is going to get tested. We'll see whether it can hold and or is it going to be taken out, and how we come into that area is going to say quite a bit. We go to the 30-year. We take a look at the 30-year. What we have inside the 30-year is this. 30-year today comes down with 25 ticks. We do 263,000 contracts. The swing point on the 30-year is 158.26. It's going to go in after that. I suspect it's going to go after it tomorrow. Where I suspect hey, we'll see how it goes after it. The TLT. If we take a look at the TLT, the TLT is the 20-year plus bond. The TLT right now has come back into the lowest swing point with dramatically lighter volume. The TLT is trading 126.41. Your swing point out there is 125.95. Your volume there is 14.9 million. What does that say? Well, first off, it's going to go after it. So we'll see how it goes after it. You know, does it go after it with volume? Does it reject lower price? What does it do? Fundamentally, what we have is that the yield out here on the 10-year right now is 2.1. Bottom line is that that yield has been going up. King dollar. Let's go take a look at King dollar, because King dollar is basically staying at these highs. King dollar wants to go after its swing high, and this is where the correlation comes in between King dollar and the gold and silver market. DXH. King dollar, January 26th, folks, is your benchmark. That benchmark out there, I suspect, is going to get hit. What we have had is this. King dollar did 21,000 contracts today. That's not huge contracts, but what King dollar hasn't done is backed away from the high. It did have a sign of strength on the 26th. We went from 94.07 up to 94.41 with an expanded volume. It was big expanded volume too, by the way. We did contracts out here of, we did 56,000 contracts. The high itself has about 57,000. But that high out there of 95, 85 wants to get tagged. We'll see whether basically it can hit it. Is it an ABC structure on the way up? Bottom line is that King dollar is going to basically say quite a bit, because King dollar has been going sideways since January 26th. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed down 91, 81. Let's see. 85. Dow's down at 85. Nasdaq was on 28. S&Ps are off 9.5. Gold's trading at 12.03. Silver 16.25. Bonds 126.27 on the 10. 158.29 on the 30. We're going to be right back.